Everyone tells you that the secret to success in crypto lies in mastering the charts, reading the candles, studying indicators, and memorizing patterns. It's the advice shouted across trading groups and forums, the promise made by countless so-called chart experts. But here's the uncomfortable truth. Most people who rely solely on technical analysis still lose money. Why? Because the market doesn't reward prediction. It rewards understanding. Winning in crypto isn't about guessing where the next candle will move. It's about grasping the psychology behind those moves. Every price swing, every breakout, and every dump is driven by human emotion, greed, fear, hope, and impatience. If you only focus on what the chart looks like, you miss the why behind those movements. True success comes from reading the market's behavior, not just its patterns. Understanding how investors react under pressure, how sentiment shifts, and how capital flows between Bitcoin, altcoins, and stable assets. Welcome to Crypto Education Zone, your trusted source for deep, practical crypto knowledge. Here, we don't just teach you how to trade, we help you think like an investor. Staying tuned to this channel means learning how to master market psychology, manage risk, build discipline, and create sustainable strategies that outlast hype cycles. Whether you're a beginner or an experienced trader, CEZ is where knowledge transforms into mastery. And in today's video, we're going beyond the surface, because if charts were the ultimate key to success, everyone who could draw a trend line would be rich. The truth is, there's a deeper game being played, one built on timing, structure, and mindset. So stay with me, because we're about to uncover why technical analysis alone won't make you rich, and what actually separates consistent winners from everyone else in the crypto market. Technical analysis is powerful, but only when you understand what it really is. It's not a magic formula that tells the future. It's simply a structured way to interpret what's already happened. Charts are a mirror of human behavior. They show fear, greed, and uncertainty translated into price movements. The problem arises when traders confuse structure for certainty. They start believing that a pattern guarantees an outcome, that a breakout must continue upward, or that a line drawn on a screen has some mystical control over the market. But the market doesn't follow our drawings. It follows sentiment, liquidity, and behavior. The truth is, indicators like RSI, MACD, and moving averages are not signals of what will happen. They are reflections of what has happened. By the time an indicator flashes buy, the big players have often already taken their positions. By the time it says sell, the smart money has already exited. Yet many traders cling to these signals as if they're gospel, acting not from logic, but from emotion disguised as analysis. It feels safe to believe that numbers and lines can remove uncertainty, but that safety is an illusion. The market's beauty and danger lie in its unpredictability. Over-reliance on technical tools often turns into emotional trading. You enter a position not because you understand market behavior, but because an indicator told you so. Then, when the trade moves against you, you panic, redraw lines, or jump to a new strategy, all in search of the next perfect signal that doesn't exist. In truth, every indicator you see is a lagging story of crowd emotion. Once you realize this, you stop treating charts as prophecies and start treating them as maps of collective psychology. Real mastery begins the moment you stop worshiping the chart. When you step back and ask, what's really driving this move? Who's buying here? Who's selling? What's the sentiment behind this price action? That's when you start to understand the forces behind the candles. Technical analysis gives structure, yes, but true power comes from seeing the invisible currents of behavior beneath those lines. The real game in crypto isn't played on the charts, it's played in the minds of people and the flow of liquidity. Every price movement, every candle you see, is just a reflection of collective emotion and money movement. When fear dominates, liquidity drains as people rush to sell. When greed takes over, liquidity floods in as investors chase green candles. The charts simply visualize these emotional waves. They don't create them. What truly drives the market are the invisible hands of psychology and capital flow. Liquidity is the lifeblood of every market move. Think of it as the ocean current that carries every trader's decision. Large players, institutions, whales, or smart money don't rely on simple chart patterns. They understand where liquidity lies, at stop-loss zones, breakout traps, and emotional inflection points. They create volatility not by predicting patterns, but by engineering them. When retail traders see a breakout and rush to buy, smart money uses that liquidity to sell into strength. When panic spreads and retail dumps, they quietly accumulate. This is the constant push and pull between the emotional crowd and the calculated professionals. Technical analysis for professionals is not a strategy, it's a tool for timing. They don't look at RSI or Fibonacci to decide what to buy. They already know the narrative, fundamentals, and sentiment driving the move. Instead, they use TA to find the best when, the moments of maximum fear or euphoria where liquidity peaks. The difference is subtle but powerful. Amateurs rely on charts to predict. Professionals use them to position. Every candle you see is a psychological footprint. It's a record of hope, fear, hesitation, and greed. Once you start seeing beyond the lines and indicators, you begin to read the story each movement tells. You'll recognize when emotions are boiling, when smart money is rotating, and when liquidity is being harvested. If you want to win big in crypto, your focus must shift from patterns to people, from charts to crowd behavior. The chart is only the surface. The real power lies in understanding what's happening beneath it. When you learn to read the emotion behind the price, not just the price itself, you start playing the same game the professionals are playing and winning it. Smart money doesn't just trade the market, they design it. They understand how the average retail trader thinks, reacts, and panics. They know that most people see technical analysis as a map to guaranteed profit, so they cleverly use that belief to their advantage. The charts become a stage, and smart money are the actors scripting the moves, while retail investors become the audience, reacting emotionally to every candle that appears. When you see a breakout pattern, smart money sees opportunity, not to buy, but to trap. They know retail traders are taught that once price breaks a resistance, it's a buy signal. So they push price just above that resistance to trigger buy orders and stop losses from short positions. Then, with liquidity now available, they sell into that surge, sending the market crashing back down. This is called a liquidity trap. It's not random, it's intentional, precise, and repeated every cycle. The same happens on the downside. When the market forms what looks like a breakdown below support, retail traders panic and sell in fear. Smart money uses that panic as their entry. They accumulate quietly, buying what others are desperate to get rid of. When the dust settles, the price reverses sharply, leaving the emotional crowd confused and frustrated, while professionals move deeper into profit. This is why smart money uses technical analysis not as a strategy, but as camouflage. They understand what most traders see and expect, then use that collective expectation against them. Indicators like RSI, MACD, or trend lines are tools for crowd manipulation, not guidance. Once you realize that, you stop reacting to what's on the chart and start thinking about who is behind it. If you're playing by the same rules everyone sees on the chart, you're not early, you're the liquidity. You're the one providing the exit for those who position themselves before you. The real skill is learning to think like smart money, to anticipate where the crowd will react and prepare before they do. When you see the market from this lens, you stop chasing signals and start reading intent. That's when you transition from being trapped by the system to quietly mastering it. Every successful crypto investor eventually realizes that technical analysis on its own is just a small piece of a much larger picture. The real power lies in combining fundamentals with timing. Fundamentals tell you what to invest in. Timing tells you when. Without understanding both, you're either too early, too late, or chasing momentum that's already fading. This is where real wealth is created, not in reacting to short-term price movements, but in positioning yourself for macro shifts before they become obvious. While short-term traders obsess over 5% intraday swings, smart investors are quietly studying macro cycles. They watch how capital rotates between Bitcoin, Ethereum, and altcoins. They understand that every bull run has phases, from Bitcoin dominance to Ethereum rotation to the explosive alt season that follows. They're not reacting to what the candles show today. They're anticipating what the market will do months ahead, based on data, sentiment, and structure. Fundamentals act as your compass in this chaos. Understanding a project's utility, adoption rate, ecosystem growth, and tokenomics gives you a foundation that no chart can provide. For instance, while technical traders panic over short-term dips, fundamental investors see those moments as discounted opportunities to accumulate strong assets. They know that narratives such as the rise of decentralized finance, the next Bitcoin halving, or the expansion of AI-driven blockchain technology are what truly drive capital over time, not trend lines or candlestick formations. Timing, on the other hand, is about recognizing where we are in the market cycle. Every crypto market follows repeating emotional and financial phases: accumulation, expansion, distribution, and correction. Smart investors position themselves in the early stages of accumulation, when the crowd is disinterested and prices are stable. Then, as the cycle matures and liquidity floods in, they gradually scale out, securing profits while retail investors are still euphoric. When you merge fundamentals with timing, you gain something technical analysis alone can never give you: perspective. You stop reacting to short-term noise and start aligning with long-term opportunity. You become proactive, not reactive; strategic, not emotional. Technical analysis is the map, but without knowing the terrain, you'll still get lost. The terrain is built on fundamentals, macro shifts, and human behavior. Master those, and the chart stops being a guessing game. It becomes a guide, one you can finally read with clarity, confidence, and control. At Crypto Education Zone, CEZ, our entire philosophy revolves around three pillars: clarity, discipline, and context, what we call the CEZ formula. It's not about memorizing hundreds of patterns or juggling 20 indicators. It's about cutting through the noise and focusing on what truly drives consistent success. In a world where traders are overwhelmed by flashing charts and conflicting strategies, clarity becomes your greatest edge. Clarity means understanding exactly what kind of trader or investor you are and aligning your strategy with that reality. Are you a long-term holder focused on cycles, a short-term swing trader looking for momentum, or a hybrid who blends both? Once you define your identity, you can build a simple, effective framework around it. You don't need a dozen complex indicators to tell you when to act. You need one system you trust, refined by understanding, not cluttered by confusion. Clarity gives direction, and direction eliminates noise. Then comes discipline, the true separator between amateurs and professionals. The difference isn't in analysis, it's in execution. Most traders know what they should do: take profits, cut losses, stick to plans, but emotion gets in the way. Discipline means following your system even when it feels uncomfortable, because consistency compounds results. You can have the best setup in the world, but without discipline, it's useless. Every professional investor you admire has one thing in common. They treat trading like a business, not a bet. Finally, context, the missing piece most retail traders ignore. Charts can tell you what's happening, but not why. Context is understanding the macro landscape, the narrative driving capital, and the sentiment shaping crowd behavior. For example, a breakout during a bear market isn't the same as a breakout during a bull cycle. The context defines the outcome. When you trade or invest without context, you're reading half the story and making full risk decisions. At CEZ, we teach that clarity keeps you focused, discipline keeps you consistent, and context keeps you informed. Together, they form the mindset of mastery, a framework where every move is intentional, not emotional. Because charts show where the market has been, but psychology and strategy reveal where it's going. When you combine all three elements of the CEZ formula, you stop reacting to the market and start orchestrating your success within it. Let's close this powerful lesson with one undeniable truth. Winning in crypto has never been about charts. It's about mindset. You don't need to memorize every pattern or indicator to win big in this space. What you truly need is emotional control, strategic patience, and an understanding of how money moves through the market. Charts can show you where the crowd was, but psychology shows you where it's going. The traders who last, the ones who build real, generational wealth, are not those chasing lines and signals. They are the ones who master themselves first. When you understand how emotion drives every candle, how fear and greed create both opportunity and disaster, you begin to see the market differently. You stop reacting and start anticipating. You stop trying to predict the next move and instead position yourself for when it arrives. That's the mind over chart principle, a mindset where strategy replaces speculation and discipline replaces excitement. Every cycle, thousands of traders try to outsmart the market using tools alone, but tools without control are dangerous. True power lies in how you think, how you wait, and how you act when the market tests your patience. When you master that, no candle, no correction, no manipulation can shake your foundation. So remember this, you don't need technical analysis to win big in crypto. You need to master psychology, timing, and discipline. Because the biggest profits don't go to those who read charts, they go to those who read people. If you found this video helpful, don't forget to like the video, subscribe to Crypto Education Zone, and hit the notification bell so you never miss out on more insights. And remember, knowledge is your greatest asset in this space. Keep learning, keep questioning, and keep building your conviction.